Hello and welcome to our weekly YouTube webinar. Thank you so much for joining. We'll be getting started momentarily. We're just waiting for the viewers to join. It looks like the viewers have joined. We're just confirming the audio. Thank you so much for joining. We'll be getting started momentarily. Sounds like the audio is working. So again, thank you for the weekly My Solo 401k for attending the weekly My Solo 401k Financial YouTube webinar. I would ask you to please like this video. Please subscribe for more videos like this. If you have questions, you can chat them over using the YouTube chat comment function. If you're watching as a recording, you'll be able to post questions in our My Community. So we've set up a forum for this, for today's YouTube session, where you can join the forum, join the community, and ask questions. So let's get started. Today's topic is a very popular topic, which is using funds in an IRA LLC to invest in promissory notes. And we want to take a deep dive session with today to go over some very good do's and don'ts. So we're going to go through these slides, and if you have questions, please again chat them over, and we'll answer all the questions once we've gone through the slides. And again, if you're watching it as a recording, you can ask questions on our community, and you can post in the forum. You can also ask other questions through the same forum. So first off, you need to confirm that you have an IRA that's going to allow you to invest in an LLC. So to kind of set the stage here, we are addressing individuals that have retirement funds and they want to be able to invest in a promissory note. So a promissory note would be something where you're lending your retirement money to an unrelated person. You know, it could be a secured note that's secured by real estate. It could be an unsecured note. You know, an unrelated person could be, you know, a professional in your someone in your professional network. It wouldn't be someone that's closely related to you. And we'll talk more about who the disqualified persons are in a moment. So you need to have an IRA that's going to allow you to do what you want to do. And specifically, if you want to have checkbook control, you need to have your IRA invest in an LLC so that the member of the LLC is your IRA and you are the manager. So if you have your IRA, say at Vanguard, right? Your IRA at Vanguard is not going to allow you to invest in any type of alternative investment, including promissory notes. So you would first need to get your IRA funds over to an IRA at a truly self-directed IRA provider. And moreover, it needs to be at a provider that's going to allow you to invest in an LLC, because that's how you get the checkbook control. So our first do here is do confirm that your IRA can be invested in an LLC. And note that not all self-directed IRA custodians allow this, right? Some self-directed IRA custodians require that they hold the money. So you might be able to invest in a promissory note, but you're not going to be able to do that with checkbook control. So on the don't side of the slide, if the IRA custodian does not allow it, don't invest your IRA in a single member LLC. This is likely going to be reported by the custodian as a taxable distribution. You know, they may not, of course, allow you to do that. So you would first need to transfer the money over to a custodian that's going to allow you to invest in a single member LLC. So thank you again, everyone, for joining. I see we've got more members logging in, more viewers logging in, excuse me. So please feel free to ask questions in the chat, and we'll go through your questions once we get through the slides. So next, you need to make sure that you have enough money to fund the investment. So you want to line up the funds. If you don't have enough money in your IRA, You want to make sure that those funds are liquid, right? You might need to sell an investment so that you have the cash in your IRA to be able to fund that promissory note investment. And then if you still don't have enough money, then the only other way that you're going to be able to get money into the account is either by transferring the funds from a different retirement account or making contributions. So if you're transferring the funds, of course, you have to be eligible to roll over those funds. So for example, if the money's in your current employer plan, you're probably not going to be eligible to transfer it. Typically, you can't transfer money from a current employer plan until you're at least 59 and a half years of age. And so you could always check with the employer, check with the administrator of your current employer plan and find out the specifics for your account, but that's the likely answer. But if it's in a former employer plan, you could roll it over, or if it's in another IRA, you could roll it over. And of course, you'd want to make sure it's like to like, unless you're looking to do a Roth conversion from a pre-tax to a Roth and pay the taxes. And then also another way you could take money that's not in that retirement account, like it's in your personal account, and put it in the IRA is you make a contribution. But then you've got to consider the contribution rules, right? So there's limits in terms of how much you can contribute. You need to make sure that you have the income to justify that contribution, work with your tax advisor to report it accordingly. Now, on the don't side of the equation, you can't lend money to your IRA LLC. So you would have to you could make a contribution based on what we just said, but you can't just lend money to your IRA or to the LLC that's owned by your IRA. So the rules don't allow for loans to an LLC for making IRA LLC note investments. And keep in mind, a good related point to this slide here is even if you're eligible to make the contributions to your IRA, you're really making it to the IRA. You're not making it to the LLC that's owned by your IRA. So you got to first put it into the IRA account and then have it transferred over and invested in the LLC. Okay, so great. So our next do and don't here is draw up the promissory note investment paperwork. So you need to document the investment. So it's not just a handshake deal, right? It really needs to be documented where the LLC is lending money to that unrelated person, and then that unrelated person is promising to pay back the LLC. So the documents are going to include the note instrument, the promissory note, the payment schedule, and if it's secured, any documents or steps that need to be done to perfect that security interest, right? So if it's secured by real estate, you might need to file something with the county, and you would want to work with your local advisors to determine exactly what steps need to be taken to make sure that your security interest in that collateral is perfected, so that in the event that you have to enforce it, you'll be in the position to do so. So you don't want to forget, on the don't side, don't forget to include the terms of the promissory note. So the whole purpose here is to grow your retirement account, to grow your IRA LLC. And so, of course, you don't want to admit the interest rate. So it needs to be a market arm's length interest rate. And then, of course, again, as we mentioned, if the loan is, whether it's the loan is secured or unsecured, the length of the note, the type of interest, right? Is it simple interest? Is it compound interest? All those details need to be spelled out in that note that the borrower is signing when they're promising to pay back your LLC that's owned by your IRA. So again, please don't hesitate to ask questions and we'll answer those questions, but otherwise we'll keep going forward. In terms of the titling, so do be sure to list the IRA LLC as the lender or the beneficiary. So here your LLC that's owned by your IRA, the LLC that's owned by your IRA is the lender. So you want to confirm that it's listed on the note in the name of the IRA LLC. For example, the name of the LLC might be Sky is the Limit Investments LLC. So don't list the IRA custodian as the borrower, because it's prohibited to lend funds to the IRA custodian, right? So you need, like we talked about at the beginning, you need to make sure that you have an IRA at a provider that's going to allow you to invest in an LLC. So these are like your self-directed IRA custodians. A lot of our clients have their IRAs at forged trusts, but you can't lend money to forged trust. They're not going to be listed as the borrower. Forged trust is not going to be listed as the lender because the loan is not coming from your IRA. It's coming from the LLC that's owned by your IRA. And I see that we've got a question here. We'll go through a few more slides and then we'll answer that question. Thank you so much for bringing it to the webinar. So in terms of the borrower and the consideration, the do's and don'ts, you want to confirm that the borrower is not a disqualified party. We alluded to this when we first started talking about that. So, for example, it would be prohibited to process a note to your parents, your children, so up and down the family tree, or an entity owned by those individuals, you, your spouse, parents, children, etc., or an entity owned by any of those individuals. So those are prohibited persons. You can't lend money from the LLC that's owned by your IRA to a disqualified party. So on the don't side, don't lend the IRA LLC funds to yourself. So just like you can't borrow from your IRA, the same is true for an IRA LLC. If you're eligible to set up a solo 401k, in other words, you're self-employed, you're reporting self-employment income, there's no full-time W-2 employees working for any business that's owned by you or a spouse, if any, you could open up a solo 401k and then you could take a loan from the money in the solo 401k. So that's an option for a solo 401k, but not an IRA. Okay, so now let's turn to funding the IRA LLC in order to make a promissory note investment. So, really to funding the promissory note. So you want to wire the funds directly to the borrower. So make sure the note investment funds flow directly to the borrower's bank account. Otherwise, it may result in a taxable distribution from your IRA. So you wouldn't have the funds flow to you personally, right? You got to go directly to the borrower's bank account. So on the flip side, don't first loan your personal or business funds to the borrower and then have your IRA LLC reimburse you. I mean, one of the advantages of having the IRA LLC is that you've got that direct checkbook control over the money. So you can move very quickly to make an investment, as opposed to the model where you have a self-directed IRA, but the funds are at the custodian, and then you have to wait for the custodian to act. Here, you have the checkbook control. You're the manager of the LLC. So once the money's in that LLC account for the LLC that's owned by your IRA, you can start investing right away. So you can't get ahead of yourself, though, and go ahead and lend the money on behalf of the LLC that's owned by your IRA out of your personal account or your business account, and then have that IRA LLC reimburse you. That's going to be, at best, a taxable distribution, at worst, a prohibited transaction. Now it's time for the IRA LLC to be paid back. So do make sure the note payments are made directly to the IRA LLC. So once those note payments commence, they need to be deposited directly to the IRA LLC bank account. So they're not going into your personal account, right? Not into the business account, directly to that LLC bank account. So the borrower here is paying, if it's coming by check, it's going to be a check payable to the LLC that's owned by your IRA. So on the don't side, don't first deposit the promissory note payments into your personal bank account. Remember, the lender is the IRA LLC. So therefore, the note payments and the final payoff must be deposited directly to the IRA LLC bank account. Okay, great. So again, we'll post a link to the community forum in the YouTube description, where you'll be able to continue the conversation. If you have questions, you'll be able to access the full recording, and we welcome you. All are welcome. There's no cost to join. In the meantime, we're going to field the questions that those who are attending now brought, and if you have more follow-up questions, please chat them over, and we'll get to all the questions. So I currently have a SEP IRA at Schwab. Can I set up a self-directed IRA LLC and transfer funds from my SEP account into this self-directed IRA LLC? Can this account be held at Schwab? Great questions. So the good news is that you don't have to qualify in order to set up an IRA LLC, because an IRA is really an individual retirement account. You just have to be an individual, as opposed to a 401k where you have to be self-employed, reporting self-employment income or at least activity, and have no full-time W-2 employees working for any business owned by you or a spouse. So you can certainly set up the IRA LLC. But you can't have the IRA. It's going to be two accounts. So let's take a step back. It's going to be two accounts. There's going to be an IRA account and there's going to be an LLC account. So the IRA account needs to be at an IRA provider that's going to allow you to invest in alternative investments, specifically an LLC. So Schwab doesn't offer an IRA that's going to allow you to invest in an LLC. You would need to go to one of these specialty IRA custodians, such as Forge Trust, like I mentioned. So they certainly do allow you to invest in an LLC. So the funds would go from the SEP IRA at Schwab over to the IRA at Forge Trust, and then from there could be invested into a brand new LLC. So it would go again, SEP IRA to IRA at the custodian, then to the LLC bank account. Now you're the manager of that LLC and the member is your IRA. Since you're the manager of the LLC, you have the checkbook control over the money. Now the fact that you have a SEP IRA suggests that you might be eligible for a solo 401k. So, that's something you might want to consider. Of course, if the money that you have were in a Roth IRA, obviously SEP IRA, that means pre-tax, but Roth IRA, you'd always have to transfer to an IRA LLC. So, but at any rate, that's the answer to your question. Let me know if you have any follow-up questions. Otherwise, we'll go on to the next question. So here we've got a question. Can my solo 401k invest in existing notes from a note reseller under the name of my solo 401k without an LLC? So here we've got really a solo 401k question as opposed to an IRA LLC, which is fine, just to identify it. So the answer is yes. If you have a solo 401k through us, where it allows you to invest in alternative investments, you can certainly buy an existing note. It doesn't have to be the first note where you're lending the money out. It could be that someone else, an unrelated person, lent money to a different unrelated person, and now that first lender wants to sell that paper, wants to sell that promissory note, and you could use your solo 401k to buy that note from that first lender. And then now the borrower would have to pay back your solo 401k. And you wouldn't need an LLC in order to execute that transaction. That's one of the advantages of a solo 401k, is that you have direct checkbook control without the need for an LLC. So hopefully that helps. So we do have more time. Please don't hesitate to ask any more questions or follow-up questions. Otherwise, we really appreciate everyone taking the time to join and participate. And again, let's continue the discussion in the community. We will have links in the YouTube description where you can join easily. And then a link again to the forum where we'll be posting the slides to this today's YouTube webinar presentation, as well as a link to the full video. Thank you. So thank you so much, everyone. I don't see any more questions. So we'll until next time. Thank you.